Welcome to the December 23rd, 2024 Advance Report built for McGowan Group clients by McGowan Group Wealth Management. Here we've got a big old Dow correction this week, and it tells us something because we're going to launch into 2025 forecasts, especially based on what we saw this week. Now, let's frame it. So the Grinch, Jerome Powell at the Fed, first releases his announcement, we're cutting interest rates by a quarter. The Treasury market had already predicted it. I told you that last week. That's why people subscribe to YouTube McGowan Group, because we like to be ahead of the curve. And if you watch the T-bills, it generally tells you what the Fed's going to do about a week ahead of time. It did it in September, did it in November. All right, so the Fed cuts. Now they've cut rates by a full 1%, and they were going to cut by another percent next year. That'd be 4 cuts, like every other meeting, cut the rates. Well, they said, no, we're only going to do 2, all right? So that was the first forecast that we're covering today. And Jerome Powell gave a very bad speech. My wife Katrina said he just confused everybody because he's talking about wage softness and stuff like that. But anyway, it was a speech that the Dow hated. The Dow was up like 200 points, right, for the speech. And it went down lickety-split, 1,300 points, closed down 1,100 points. As a matter of fact, on the last trading day of the week, when I did the market report for the radio stations, the Dow had gone all the way to 42,000. The high was 45. Lickety split, 3,000 Dow points gone. That's about 6% of the 6% gone. Well, what happened on Friday? It tells you something also about 2025. This pattern has been going on in this uptrend. You could see the April correction. Whoop, you shouldn't have sold there. Then you had the May correction. Whoop, shouldn't have sold there. Then you had the correction that began early August. That was the delevering. And this was a quick delevering before the holidays just to dissect it. But it tells us a lot about 2025. So this pattern is still intact. Whoa, you get smacked down. That's September. Whoa, shouldn't have sold there. Get smacked down. Whoop, shouldn't have sold there. That was a pretty, if you were short right here, you got your face ripped off really fast. That's painful. And, oh, you did it again in November. Whoop, December. Now, by the close of the week, back to 43,000, all right? A familiar pattern for traders. You're in a speculative market. That's important for 2025. But what did Thursday tell you? The market had already built in next year's cuts and even the cuts beyond that, because the Fed said in their 3-year projections that they were going to take rates all the way down to 3%. And that's still true. They're just going to take longer to do it. But a lot of this rally already built that in. So that means it's not that important. What's more important is the updated projections. GDP 2.1% for next year. That's in the Fed forecast. They seem to like the number 2%. 4.4% unemployment. That's up 0.1%. Labor market softening, right? And inflation holding steady next year at 2.5%. Now, the Fed has this goal of 2%. Here's the news on the Fed's goal of 2%. If you go back to 1913, there's a book called The Creature of Jekyll Island, and it was about the creation of the Fed. Anyway, 111 years. What is the average inflation rate over any reasonably long period? 10 or 20 years. Most of the time, it comes in at 3.33%. So 2% is pretty ambitious. Anyway, other forecasts, JP Morgan says the market's going to make 7% next year. We've got other forecasts chiming in with a reasonably optimistic. You know what's absent of those forecasts? Pessimism. You know what would surprise the greatest number of investors? Well, one possibility for next year, you're due for a real correction, 10 to 15% or so. And you could finish the year at that boring 6 or 7% that is the market average. So that's one of the possible outcomes What are we doing about it? Well, we've been raising more cash in the portfolios, our strategic safety. By the way, I'm Spencer McGowan, President, McGowan Group Wealth Management. You're a financial weatherman with your weekly fast-paced tour of the global financial markets. So in our managed accounts, we've been letting cash build up. We're harvesting things that may be overvalued or underperforming so that we've got dry gunpowder. Whoa! And this pattern says that dry gunpowder usually comes in handy even in a bull market where the Dow's up about 16% as of the close Friday. Now, whoa, what's this? Top 10, bottom 10 over the last 90 days in the S&P 500. I like to do this because it gives you an intelligence read on what's working and what's not. So, United Airlines, wow, 82%. And I'm going to cover the 10 big winners at the end here. Tesla up 79%, cozying up with Trump and Musk at Mar-a-Lago. That seems to benefit because Tesla's really one of the only electric car companies, EV makers, that makes a profit and could still make a profit without being on government welfare. All right. Lululemon, 42%, Decker Outdoors, 37%, Carnival Cruise, Royal Cruise, up 35% or so. And Broadcom woke up 32%. Now, if we go down to this side, Irving-based Celanese, this surprised me. They've had a horrible year. Most of the horrible year was the past 90 days. Solar, Enphase getting crushed. Moderna down 40%. Vaccine hangover, we'll say. Newmont Gold down 30%, which surprised me because gold didn't go down. All right. Whoa, Bitcoin hit 108,000 at the start of the week. And then lickety-split went all the way to 93,000 at one point, finishing at about 97. In 48 hours on Thursday, concurrent with that Fed announcement for some reason, wow, cryptocurrency as a group lost $600 billion. And the biggest declines, of course, were in the nonsense coins, as Preston Lane calls them. The nonsense coins are just stuff that people made up, and there's way too many of those. So you are ripe for a sell-off, but from an investment standpoint, I guess we just should have bought Bitcoin this year, up 130%. Here's the Fed rate cuts. This is the 90-day T-bill. It follows the Fed. I'm going to show you something strange about the fixed income markets, and it tells us how we may be able to take advantage of it. All right, so 5.3% was about the rate, and they've lowered by 1%. And so the T-bills followed the Fed. There's the September cut. Ahead of the announcement, the T-bills moved down, and here you had the 0.25% that the T-bills moved because the Federal Reserve appears to be leaky. Now, whoa, that's kind of the opposite. Fed cuts short rates. By the time they did, this rate had gone down by 1%. The 10-year Treasury, 3.6. Now, it goes to 4.6. It's up 1%. Short rates went down 1%. That's normalizing the yield curve. Usually you get more for 10 years than you do for 90 days, right? It's a commitment. And you got duration risk. All right, winners of the year. Top winners. North Texas powerhouse power provider Vistra, 260%. Everybody piling in because data centers use electricity. NVIDIA, 164%. Wow, they fulfilled that. United Airlines, 131 total. Texas Pacific Land, 888,000 acres from the Texas Pacific Railroad bankruptcy landed in a trust. And instead of just being a trust, they were sitting on all this land and they paid out this little stingy dividend because they were just treating it like a royalty trust, and nobody really cared. So it was kind of bad management. Then all of a sudden they said, hey, we're going to start acting like a real company. And they entered the S&P 500, I believe. All right. Broadcom up 101, GoDaddy up 90, Constellation Energy up 93. That's that data center electricity demand. A lot of that's going to be natural gas, and that natural gas is going to flow through pipelines. Then you're going to approve the liquid natural gas facilities that are waiting to export. You arbitrage potentially the price of $3.67. Natural gas is up 58% for the year. And in Europe, it's $14. The more you export, the more those two come together, and that's a potential opportunity for energy infrastructure. All right, CVS and Walgreens make up 2 of the top 10, minus 45 CVS, minus 64 Walgreens. Ouch. And Dollar Tree down 51%, Solar Enphase down 48, Dollar General, wow, minus 45. So that's the top 10, bottom 10 for the year. I'm Spencer McGowan. You can find us at networthradio.com. We serve affluent families right from the Crescent in Dallas, a team of 10 professionals with advanced skill sets. You want McGowan Group Wealth Management on your side. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.